Hey guys, today we're going to look at some really cool retirement planners that are going to help you be able to figure out when can I retire and how much can I spend in retirement. So the awesome free calculators we're going to look at today, they attempt to answer some of the most difficult questions one has when going into retirement. The first one being, how will my savings perform, or how will my portfolio do? Will it be a bear market where I'm losing money, I'm spending money, and I just really am concerned I'm going to run out at any time? Will it be more like an average market, kind of what I anticipated spending, and I'll be okay? Or will it be a raging bull market and I'll be making money and I really won't have any spending concerns? The first calculator we're going to look at, the Cfire Sim, it has a real interesting take on this question. It'll look at your individual retirement parameters, what your portfolio size is, your spending plan is, and it'll plug your retirement period, say 30 years, into every single period in history, and it will show you, given your parameters, whether or not you would have succeeded in retirement. So this is very interesting. It'll kind of give you a sense of peace of mind if you can look through all of the periods in history based on your numbers and say you're going to be all right. Or on the other hand, if it looks like you would have gone broke in a number of instances, you may have to reconsider your plan a little. The second retirement planner we're going to look at, it tackles another very difficult question we all have going into retirement. Mortality, or how long are we going to live? And none of us really knows that. But the second calculator, as well as put in your other parameters, you're also going to put in a mortality table. You get to pick from 3 tables that are in the planner. And then it'll calculate percentage chance of when you might pass away. At the same time, it's looking at your portfolio size and your spending plan. So it lays out, after you've entered everything, into a very nice chart with your age at the bottom. And you can look at any age point, and it'll show you the exact percentage you will be either broke, rich, or dead. So this, again, it's interesting information. It still doesn't tell any one person where they would pass away, of course, but it does kind of show statistically what the odds are in actual percentages of running out of money before you would pass away. So maybe kind of morbid, or maybe kind of funny, depends how you look at it, but it's an interesting way of looking at retirement that I haven't seen on any other calculator. So without further ado, let's look at these two calculators and have some fun with it. So here we are, guys, on what I think might be the best free retirement planner I've ever seen. And by the way, if you have a minute to like and subscribe, it would really help me continue my content, so I would appreciate it. Okay, so we're going to look at the inputs here for this calculator, which is called Cfire Sim. Over here, we're going to put the amount of your portfolio that you have. In this case, it just came out to $1 million even. And initial spending, $40,000 a year. So the old 4% rule. We're going to see if that works in this particular case. These are all inputs you will put in yourself as well. Of the portfolio you have, how much is equities? Pretty common would be like 60% equities, 30% bonds. Here it has a place for investment fees, so I put in 0.5% there, which would be kind of common. Gold, I have 0%, and cash 10%. So out of that $1 million, that's exactly how I've got it allocated for this particular sim. I am putting in a Social Security payment that you would have coming in. In most cases, U.S. citizens at least will have that. If you don't have that, you won't put that in. This particular case, I'm putting in a monthly Social Security payment of $2,000 a month. If you're a married couple and you want to do this, you could also put your spouse's Social Security on this side over here. Down here, you have the opportunity to add any other income, or if you have a second job or a retirement job or rental income or anything else, you can put it in this section. But I'm going to say in this case, we don't have any of that. And now you just click, once you've got your inputs in, the Run Simulation tab there. And we see a bunch of numbers, but let me show you the key things to review here. First of all, right here in the center, it shows your success rate. And based on those numbers I put in, you have 100% success rate, guys. So that means you are not going to run out of money under any historical scenario. And that's what this above here is kind of showing. It's kind of a crazy chart, but basically this is looking at the entire history of 30-year periods in the stock market. And it's showing you where you would have ended up if you'd started at any period, all the way back to the 1800s and then more into modern times. But the main thing is you don't see this thing going below zero anywhere on any of these periods. So that means the chances of you going to zero would have to be a real aberration, something that's never happened in history. Some of the other numbers here, that would be your median or average portfolio at the end of the 30-year period, 2.6 million. So if just average market conditions, that's where you would be at. And here, I'm going to click this little button. It shows the worst dips you would have had in your portfolio. If you'd started, say, in the 1966 30-year cycle, your portfolio would have dipped all the way down to 400,000, but you never would have gone below that. So given these numbers, it's pretty clear to see you would have been pretty safe, with that $1 million portfolio spending $40,000 a year, and assuming you had the $2,000 in Social Security. Now you can go back. You might say to yourself, well, hey, I could spend more than that. And the great thing is, you can go back, click that Inputs tab again, and you can make an adjustment on any of the numbers that I showed you on that first page. So let's say you're going, you know what? I don't necessarily want to spend $40,000 a year. Maybe I want to spend $65,000 a year, or I would be more comfortable doing that. Or I could get a bigger house, or I could move to a place I'd more desirable place in the country. So if you plug that in and keep everything else the same, your portfolio the same, your breakdown the same, your Social Security the same, then we can run the simulation just based on that increase in income. And let's see what happens. So now we're going to go look at the same important number right in the middle. First thing we're going to look at right here is we would have failed on some of our cases in some of the historical situations. However, there's a 77% chance of success in this given scenario. Anytime you see these lines dropping below zero, that would have been a case where you would have run out of money. As you can see, there's quite a few scenarios where you still would have not run out of money. Now, another kind of interesting thing to look at is portfolio dips. And this shows you the years, the worst situations. If you had the 1966 portfolio for 30 years, you would have run out of money after 19 years. And some of these other ones, you would have gotten a little further along. But all of these year portfolios, start like the 1907 30 years portfolio would have run out after 27 years. So you're rolling the dice a little bit, taking that 65 out. There's a 77% chance you would have success. But there is a 23% chance you would have failed in this scenario. So work with this, check out the different scenarios and see how it applies to your particular situation. And you might learn a lot or feel a lot more comfortable about your retirement. Okay, guys, now we're going to go over the second awesome free retirement calculator. And this calculator tries to cover one of the most difficult questions you have going into retirement is, will I outlast my money, or what they usually call longevity risk? And this calculator, called Rich Broker Dead, gotta love the name, is going to be on engagingdata.com. I'm going to have the link for that as well as our other calculator below, along with a link from my favorite discount broker, Interactive Brokers. Okay, so again, you're going to have your own inputs that you'll be putting in, but to make it kind of simple, I used the same inputs I used on our previous calculator. So let's go ahead and kind of go through them. Spending per year, I said 40,000 again, like last time. $1 million in savings. Retirement age 65, 30-year retirement. Now, since this deals with longevity risks, one of the main things is what table of longevity they're using. And here they use the average Social Security age limits. But if you say you are a smoker and you don't eat well and you've had some health issues, you could switch it to this one. This will affect the chart. Or if you are generally very healthy, eat healthy, work out, whatever, you could use this, click this one. So I'm going to go with the standard average Social Security death rates. Then we went into the same thing as the other one. It asks, what percentage of your portfolio is stocks, bonds, and or cash. So I used a kind of a common 60-30-10 for a retired person or someone close to retirement. Extra income, I did put in the same Social Security of $2,000. And I said that you'd retire at 65, but you'd start your Social Security at 67. And that won't end, obviously, until you die. So the chart below, based on that information. Okay, so looking at this chart, starting off at age 65 when we retire. It has different percentages, and different shades of green mean different things. The top shade means you have 2 times your original starting balance of $1 million, so that would be over $2 million. The kind of medium green means you have more than you started with, or more than $1 million, and the light green area is showing you would have less than $1 million. So let's say, again, we said we retired at 65, and at age 70, let's look at what's going on. The gray area stands for when you would be dead, the percent chance. So at age 70, it's showing you would have an 11% chance of being dead and a 0% chance of going broke. 31% chance you'd have less than $1 million. 57% chance you'd have more than $1 million. Now let's ride this on out to age 80. Age 80, you would be showing a 41% chance of being dead, a 0% chance of being broke, a 23% chance of having more than or less than $1 million, and a 24% chance of having more than $1 million, and 11% chance of having more than $2 million. And we can go on and look at every age group, and this is going to change all the way up to 88% chance of being dead at age of 92. So you might go and say, hey, I don't want to die with a bunch of money. Let's go back up and see if we could spend $65,000 a year instead of $40,000, like we did with the first sim. So let's do that. Let's go back. Change that 40 to 65,000 a year spending. Keep everything else the same. Everything in here is variable, though, if you want to change it for your own sim. And let's see what the chart tells us now. And things changed a little bit at age 70, starting again at 65 here. At age 70, still 11% chance you'll be dead and a 0% chance you'll be broke. Then you start to see a chance you would go broke, 3.3% chance you would go broke at age 78, taking out $65,000 a year. So it's a low percentage, but it's there. And it continues to go up. At age 85, you'd have a 13.9% chance of going broke. But then, on the other hand, you have a 61% chance of being dead. So I guess when you're looking at this, you kind of want to roll the dice. Then here you go. Here are the actual percentages. At age 88, 74% chance you'll be dead, and a 10%, or about 11% chance you'll be broke. And a 5% chance you'll have more money than you started with. So just kind of an interesting way of looking at the longevity part of retirement. So I hope you found this video helpful. If you do, take a second to like and subscribe, and have a happy, healthy, and long retirement.